Hi, good morning, everybody. Um, my name is Michael. I really appreciate that everybody's come out as well to do this, and I'm really excited as well for this um, uh, basically event. So why don't I just kind of start off, I guess, by just quickly introducing our two speakers who I'm really excited to hear about. So Donna Lewis or Louise?
St. Louis. Did you
Okay,
catch?
St. Louis.
Yes, Donna
So
St.
Donna
Louis.
St. Louis is basically a member of the Coldwater Indian Band at the Nakalapatu Nation, and she's currently working as a business development manager, responsible for basically increasing awareness of First Nations in the Financial Authority in Western Canada and the Northern Western Territories, while supporting those First Nation governments in accessing capital markets through the membership of the First Nations Finance Authority. So really excited to have her as a kind of member of the Coldwater Indian Band. It will be really interesting to get her kind of general perspective on kind of her journey. She completed her Bachelor of Arts at the University of Victoria in basically sustained community development at Simon Fraser University. And then she joined the FNFA after she worked with TAC, basically delivering government funding and loan programs. I'm so sorry, Donna. Hopefully that kind of helped introduce you a little bit. I'm sure you'll be able to do a little bit a better job as well. And then your counterpart, Dawn. So sorry, I'm very bad with last names. Dawn, do you mind just telling me how to pronounce your last name again?
Morin.
Morin? I'm so sorry. I'm Don Morin. Thank you so much for coming and introducing yourself. Don is a member of the Treaty 6 First Nations of the Eno Cree Nation, which is located on the boundary of the city of Edmonton. Don is a business graduate of the Northern Alberta Institute of Technology. Previous to his role with the Treaty 6 territory, previous to his role, though, he began at RBC Royal Bank, providing personal loans as well as commercial loans and mutual funds as a salesman for 2.5 years before moving into work with the Alberta Indian Investment Corporation. And he spent 13 years there working in various roles. And most recently, he's working now as the manager of the Eno Cree Nation Economic Development for 15.5 years, as well as at the same time serving as a member of their finance committee for 14. So we're really excited to hear a little bit more about what they have to say about infrastructure and projects. So I will move it toward them. If there's any questions that any of the participants have during the presentation, please just put it in the chat and I will bring it up to the speakers. And then you guys can continue to participate as much as you can in this and learn as much as you can. So I will leave it off to Donna and go from there. Thank you so much.
Thank you very much, Michael, and thank you for that introduction. It's a pleasure to be here presenting to the links to learning for BC. As Michael said, my name is Donna St. Louis. I am a member of the Nkaplima Nation, or more specifically, the Coldwater Indian Band. And I see I got some cousins out there in the audience, so I'm happy to see your names. I'm working for the First Nations Finance Authority as the Business Development Manager for BC and Northwest Territories. While I am from the Coldwater Indian Band, I'm actually calling in today from the traditional territory of the Squamish Nation. I live in the district of Squamish, which is halfway between Vancouver and Whistler. So really happy to be here today. What I'm going to do is I'm going to give a presentation to start, and then it'll be followed by a presentation by my colleague Dawn. And then after that, we'll have time for questions and answers. Okay, so I'm going to share my screen. There we are. Everybody should see my PowerPoint presentation now. Is that correct? All right, awesome. Okay, so I want to start off with a video. Hold on a second. There we go. Let's start off with a video.
Way ho, way ho, ya.
We could use one of our examples in regards to joining the FNFA. I can talk about the weengush, the Nishnabek. We call that our sweetgrass. One of the strands of sweetgrass is potentially very weak by itself, but when we braid it and when we do things collectively, we're very, very strong. With more First Nations joining the FNFA, we're stronger together.
Sorry, guys. Almost made you watch it again. There we go. So the reason why I brought that video was because I think it really tells the story of how when First Nations work together with the FNFA, we're stronger together. So I'll allude to that throughout the presentation, just so that you can see how that relates to the way that we work. But what I want to do in this presentation today is provide an introduction to the First Nations Finance Authority. I realize it might be a new, or maybe you haven't heard of the organization yet. So I want to introduce the FNFA, how we benefit our members and how we can finance some large capital projects. So a good place to start, I think, is just with describing who we are. And in doing that, I want to talk about the two acts that we operate under. First is the First Nations Fiscal Management Act. This is an optional piece of legislation because it was really important that First Nations who helped create it, they didn't want it to be imposed on any community. And the reason why it was established was to promote internal capacity development, as well as low rate loans for First Nation governments. There are three institutions that operate independently of one another under the Act. That's the First Nations Financial Management Board. They provide the capacity development to First Nations governments. And then there's our organization, the First Nations Finance Authority, and then the First Nations Property Tax Commission or Tax Commission. And now the Tax Commission, they're there for any First Nations that want to use property tax revenues to support loans offered by the FNFA. The second piece of legislation is the securitization of other revenues regulations, and this allows First Nations to leverage revenues other than property tax. Examples of other revenues could be in BC gaming revenues, forestry revenues, as well as business revenues, and so on. They're, if I were to describe them, they would be unencumbered. They're not being used for any other purpose. They are in addition to the community's regular revenues. Okay. So the FNFA, what is it? Well, it's a not-for-profit statutory institution created by the Fiscal Management Act. We are not a Crown corporation. We're completely independent from the government, and we're not a bank. We are 100% First Nations led, and FNFA's board of directors are elected chief and councillors from their communities, and they're elected by our membership. One of the things I really like about the FNFA is that it is created to level the playing field for First Nation governments, now giving them access to capital or loans at rates similar to other governments. And you'll see that in our mandate, to provide First Nations with access to the same capital market opportunities that are available to other levels of government. So when, another municipality or province, when they need to finance a large capital project, they don't go to the banks. Instead, they go to the capital markets and access low rate loans. And so that's what we do for First Nations governments as well. We have two loan programs. The first is our short-term loan, or an interim and construction loan program. Communities will typically access this particular loan because they're financing a large capital project, and while it's in the construction phase, they want to keep their costs low. Because while a loan is in the short-term or interim loan program, interest-only payments are required. So that helps to keep the costs down. Interim on our short-term loans, it's not fixed. And short-term loans are typically converted to long-term once the construction is completed at the request of the First Nation or after a year. Okay. The second program is our long-term loans. These are also referred to as our debenture loan program. And in this particular program, some key features are that the loan terms are fixed for 10 years, and that's where the rate is locked. The loan can be amortized out to 30 years, but the actual term is 10. The current long-term rate is 2.75%. The short term is 2.4. Sorry, I should have mentioned. And so those are the posted rates as of today, and those of course could change. Some additional features, there are no fees that we charge for our loan programs, no application fees and no monitoring fees at any time. And another key feature is that we don't take collateral from First Nations when we do these loans. Instead, what we do is the loans are supported by the other revenues. And I'll explain how that process works shortly. Some additional services, we offer capital advisory services where we have people on staff that can do a review of a community's most recent 5 years audited financial statements, and then provide some feedback on possible refinancing options if that is something that they wish to do, or give them an idea of what type of capital they can access through the FNFA. And then finally, we have investment services for communities looking to safely invest on a short or medium term basis. Okay, so here's a slide that sort of gives you an idea of how we've some of our key or some of our highlights since 2005. So in 2005, the First Nations Fiscal Management Act received royal assent. In 2011, the Other Revenues Regulation passed through legislation. We did our first debenture in 2014. That was $90 million at 3.79%. And then since then, we've had a number of investor grade credit reports, which I'll explain in a few slides forward. And then, yeah, we've also, let's see here, 2018 Governor General Award for Innovation and Finance. And then in 2021, we issued our 8th debenture, $354 million at 1.9%. That was a big one. And then we also hit a major milestone of $1 billion in financing. And today we're at 1.305 actually dollars in financing for First Nations communities across Canada. So this right here is a snapshot that outlines the process for First Nations to become a member at FNFA. Because the First Nations communities that borrow from us, they borrow collectively or as a group, it's really important that they all go through the same process. And that includes being voluntarily scheduled with the Fiscal Management Act. It also includes working with the Financial Management Board and obtaining or developing a financial administration law, and then also getting the financial performance certificate. Okay, and then after that, First Nations will work with us to become members. We'll do a review of the most recent 5 years audited financial statements and schedules, and determine the borrowing capacity calculation, and then submit a request to our board of directors, who will approve the request. Okay, here's another process, and that's to becoming a borrowing member with the FNFA, or to actually borrowing. So there's a few steps and documents that get completed before the request goes to our board of directors. I'm not going to spend as much time on describing this process in this presentation, but I think it's really important to let you know that we have staff in place to assist with this process. We have all the templates that are required to submit band council resolutions, to create the borrowing laws or borrowing documents, and we're very supportive in ensuring that it's as easy as possible for our members. Okay, so FNFA member projects. As I mentioned, we've lent out $1.305 billion in loans. That's to 74 nations across Canada since 2014. That money has gone to build houses and also do remediation projects. It's gone to support green energy projects and land acquisitions, as well as a number of community, social, and economic development projects on reserve schools, wellness centers, rec centers, paved roads, so infrastructure, building supply centers, hotels, and so on. Okay, there is actually a list of eligible projects that our money can go towards, and that's in the Other Revenues Regulations. And if anyone's interested, I can share that information with you. I think it's mentioned in a future slide as well. Okay, so geographic summary of where our financing has been completed across Canada. There's $211.6 million in British Columbia alone. So how does FNFA access capital? That's a question that we get often. Where does our capital come from? Well, I'll start with describing how we've received an investor grade credit rating from 2 of the top rating companies in the world. And this is really important because it helps us attract capital investors, okay? The companies assess and provide a financial report card to every government on earth, and they've accepted that FNFA recognizes First Nations as governments. So Moody's has given FNFA a AA3, and then S&P Global has given the FNFA an A+. And this is really important because our credit rating becomes our members' credit ratings, which allows us to access capital at much lower rates and then pass those rates along to our members. When I showed you the video about the sweetgrass and how we're stronger together, this is an example. One community on its own wouldn't be able to access these investor grade credit ratings, but because we're coming together as a group, we can. And so FNFA is going through the process to have that done. Okay, I talked earlier about our long-term loan program, our debenture loan program, and this is an example of what that process looks like. So we work to issue a debenture on an annual basis, and leading up to that debenture, FNFA pools all of our community's individual loans together. So for example, one community might borrow 20 million, another 5 million, a third will borrow 2 million. And then once we have a minimum of $100 million in loans, we can then access the capital markets. We can't go with just $5 million in loans. That won't help us access the low rates that we're able to obtain. Once we have the combined minimum of $100 million in loans, we'll then sell that to our banking syndicate. And they then turn around and sell that debt to the capital market investors. So the banking syndicate is comprised of National Bank, CIBC, TD, BMO, CADS, Grain and Laurentian, and they have access to the capital markets and work with FNFA to sell the debenture. The capital market investors, that's comprised of pension plans, life insurance companies, mutual funds, and so on. And so they're looking to invest or to put their money somewhere safe. And FNFA, because of the credit rating that we've received from Moody's and S&P, we're determined and known to be a safe investment. Recently, just to give you an idea, FNFA's debentures have been a bought deal or pre-sold, with the last 5 debentures oversubscribed. So that means that we're not having to go out and take this opportunity to investors. They're coming to us and they're lining up to access these funds. So it indicates investors' confidence in the FNFA and in our members. Okay, so First Nations revenues determine its borrowing capacity. So if you're wondering, well, how much can my community access? Well, it'll depend on the other revenues that your community is earning. So the FNFA allows First Nations to support loans with their choice of revenue sources. And the other revenues, as I mentioned, can be royalties, business revenues, contract revenues, and transfers from other levels of government, or there's also property tax revenues. But for the most part, all communities that we're supporting are using their own source or other revenues, okay? The FNFA will work with your community to identify potential existing revenue streams. Each revenue stream has an associated leverage factor, which is set through the capital markets, and this helps to determine your community's borrowing capacity. Okay. So here's an example of the type of revenues that communities will use province by province. And in British Columbia, you'll see the type of revenues that are used are BC gaming revenue sharing, forest tenure agreements, added value rebate tax, BC hydro IPPs, and then mineral specific resource revenue sharing policy. And then of course there's business revenues, other types of revenues as well that could be eligible. Okay. Here's an example of how the leverage factors work and how we determine a community's borrowing capacity. So the leverage factors are actually determined by the capital market. So these aren't numbers that we are allowed to apply on our own. But essentially, for every dollar of revenue earned, say from federal or provincial transfers, they can borrow $13.52 over a period of 20 years or 18.57 over a period of 30 years. So it's like a multiplying factor. This is how we determine a community's borrowing capacity. You'll see that federal and provincial transfers over 20 years, the multiplying factor is 13.52. But then if you drop down to the bottom for contracts and leases and band business, it's a lower number. And the reason why is because these leverage factors are risk rated. So business revenue is known to be riskier than federal or provincial transfers. So when a community is able to use their federal provincial funds to secure their financing, their dollar will go a lot further. Okay, so we have a number of safeguards that are required by the capital markets. The first one is FNB's certification process. So they'll work with communities to implement their financial administration law and to receive their financial performance certificate prior to becoming members of the FNFA. And this is important because it provides comfort to the capital markets. They know that our members have sound financial administration practices and strong financial statements. The next are the revenue leverage factors set by the capital markets, which I just described. Third are FNFA's reserve funds, the debt reserve fund and the credit enhancement fund. So the debt reserve fund is a fund that is comes from our members. So anytime a member wants to borrow an amount from the FNFA, they'll borrow that amount plus an additional 5%. And that additional 5% is placed into the debt reserve fund. And it's there because it's used as a backstop should the revenue stream be interrupted. The DRF can support, or the debt reserve fund can support up to 18 months of interest payment. We've never actually had to, no communities ever had to use their debt reserve fund, but it's there as a backstop. Once the loan has been repaid, those funds that were set aside for our community, they're returned as well they're returned plus any interest that they'd earned while they were in that particular account. So we don't keep those funds, they go right back to the community that placed them there. The next is a credit enhancement fund, and that currently sits at around 42.52 billion, and that's an amount that was provided to us from the Government of Canada. So that serves as an additional backstop in the event that something happens to a revenue stream. Okay. The fourth safeguard is borrowing members approve other borrowing members' loan requests. All of our loan requests are approved by our board of directors. And then finally, we have a trust account system that ensures loan repayment. So FNFA uses an interception model to repay loans. And I'm going to describe that in the next slide. So in this example, if FNFA lends $1 million to a First Nation that's repayable over 25 years. And this, of course, is a loan that's in the long-term or debenture process. That revenue stream or the revenue streams that are chosen will be around $250,000 annually. So it could be one revenue stream, such as gaming, or it could be gaming plus forestry. It really depends on the community. Okay. That $250,000 is placed into what's called a secured revenue trust account, which is managed by a company called ComputerShare. So from that account, the revenue streams, like I said, they're deposited directly into that account by the payor. So if it's the provincial government that's paying to the First Nation, instead we'll intercept that money and it'll go to the SRTA or the shared revenue account. Next, that amount goes, from that amount, FNFA is paid the loan payment. So that's $59,275 annually paid to FNFA, and that's for principal and interest. And then the remainder amount goes back to the First Nations bank account, usually within 24 to 48 hours, and the First Nation has full control over those monies. So the above process, as you can see, it's cost-free to the First Nation, and then it provides the comfort needed by the capital markets. My understanding from communities that have this in place when they borrow with us is that it relieves the administrative burden of having to manage the money coming in and then having to make the loan payment. So it's a very easy process for our members. So The next couple of slides, I want to talk about the debenture process and what we call the sinking fund. So the First Nations revenue source will go to the secured revenue trust account. And then from there, the interest is paid directly to the investors. And then we hold the principal in a sinking fund. And of course, anything that's in excess will go back to the First Nation within 24 to 48 hours. But the principal is what I want to focus on. So those principal amounts are held in what we call a sinking fund. I'm going to put it over here. So this is what a sinking fund would look like. The sinking fund is a fund where we hold the principal, and then over a period of 20 years, 25 years, the principal payments will earn interest. We collect that interest on behalf of the First Nation. So in this chart, you'll see the orange columns are represent the principal, and on top is the interest that's earned within the sinking fund. Over a 25-year period, there's $600,300 paid in principal, and the remainder is the proceeds, which can go towards the loan balance. So it really accelerates the loan repayment, and then it really reduces the cost of borrowing to the First Nation altogether. Okay. So what type of projects does FNFA lend for? Again, there's a complete list in section 4 of the financing secured by other revenues regulations. Though a quick summary of the types of projects that we support: economic development, social development, community-owned housing, equity involvement, land purchases, infrastructure, of course, and then rolling stock or vehicles and equipment. So I want to give you some examples of some different community projects that we've supported across Canada. And the first one is the Henvey Inlet wind farm in Ontario. So Henvey Inlet is a fairly remote community, and they're now 50% owners in this wind farm project. So it's been a really amazing story for them. I didn't work on this project myself, but from my understanding and in their own words, it's a real rags to riches success story. It's gone from they went from a very small community to then having like the opportunities to build infrastructure and do other things. So the wind farm, 87 turbines, they're the largest in the world, and they're able to power 110,000 homes with clean energy. Okay. Next, Chiacton First Nation in British Columbia and Coast Salish Territory or Stolo Territory. They used our financing to support a few different projects, including a sports field, housing, and a few other things that I don't recall. So there's some images of their housing in the project and in progress. Okay. Songhees Wellness Center, I'm sure a lot of people here have actually been there. So that's a 55,000 square foot multi-purpose building, which houses the nation's governance and administration offices, local services, education services, and health center. So it includes a fitness studio, international sized wood multi-sport court, sorry, and lots of other amenities. It's a beautiful building. If you've had a chance to go there, it's absolutely stunning. Temagami First Nation in Ontario, they used financing from an FNFA to support a multi-use facility, which I believe houses their administration and governments. And then they were also able to build an elders complex so that their elders could return to the home community and have safe and comfortable housing to live in. Okay, Long Plain First Nation in Manitoba, they used FNFA financing for an ECDEV project. It's a 75-room microtel by Wyndham, which opened in December 2019. Okay. My understanding of this is that this has been really, well, for the last year, they probably haven't been able to attract any conferences, but this has been really helpful with them to attract conferences and larger events to their community by having this facility in place, the hotel. Okay, Siksika Nation in Alberta, FNFA financing helped them to build their elementary school. It's an on-reserve school, and what had happened is a few years ago, probably 5 to 6 years ago. I'm not sure if you recall, but in Calgary, the Bow River had flooded and caused significant damage to a lot of housing and communities, and that included Siksika Nations Elementary School. It was rendered unsafe, so it couldn't be used. The options for this community were to, well, the first option was to wait for funding from the federal government. And my understanding is that they were put on a 50-year wait list. And during that time, their children would have to be bused out of the community into Calgary to attend school. That's not the route that they wanted to go. So instead, they did it on their own with financing from the First Nations Finance Authority. Let's see here. Next, housing. So this is more of like a residential housing development in Penticton, which is really a beautiful, wonderful location if you've ever seen it. Okay, so FNFA, our financing, you know, I wanted today to tell you about how it works and what some of the steps are and the benefits of it are, and how it can be a really good fit for infrastructure projects. What I want to do next is, going to stop sharing. There we go. I'm going to put up a presentation for my colleague Don Morin so that he can talk about the different types of financing requests that we get. So just give me a moment. Any questions come up in chat that I can answer while I...
There has been no questions in the chat so far, but that was an amazing presentation on kind of the different kind of loans and options and benefits of the membership of the FNFA, Donna, so we really appreciate that. And if you have any questions, please put them in the chat. Or if you want, at the end, I'm sure you'll have the chance to put on your camera if you want and ask directly the presenters. But if there is no other questions, we will move on to Don Moore.
Okay, I'm going to share the screen now for Don.
Thank you, Donna.
Okay, it should be up now.
Okay. Yeah, I can see it. Can everyone see it?
I can
Great.
see it.
Good morning, everyone. Glad to be presenting to you at this great conference, and it's I guess a pleasure to be part of an organization that's, I think, making a significant difference in First Nations lives. So anyway, I am from the Enoch Cree Nation, located on the west boundary of Edmonton in Treaty 6 territory. I joined the FNFA just under a year ago, it's almost a year, as a senior business analyst. And my role here is to analyze a lot of the different requests that FNFA has been really starting to receive now that you know, FNFA is starting to get recognized out there by a lot of different organizations. So what we're finding is, you know, FNFA's mandate is to finance the First Nations governments so that all types of projects, usually in the social arena, you know, infrastructure programs, and that's usually what the concentration is, but that hasn't prevented the First Nations from getting creative and taking their existing revenue streams and maximizing the use of those to create more revenue streams. So as a result of that, we've seen in the last year, the First Nations have been really looking at different types of corporate partnerships, tribal council partnerships, and then just partnerships amongst themselves. So if we move on to the next slide, Donna. So this past year, again, these requests that we are looking at from a corporate point of view, while we don't do commercial financing, we do lend to the First Nations governments who ultimately take those loan proceeds and inject them into different types of business projects. So again, these projects are significant usually, and we always like to be aware of them, whether they're coming to us and they do end up borrowing with us. We do, you know, look at those business proposals, and you know, because they can have significant impact, positively or negatively, on the First Nations, and whether they're clients of ours or not, it gives us a good feel for what's going on in the region, but also an opportunity to work with those First Nations and giving them a chance to put their best foot forward and to really know their business and what they need to do to get into that business. So again, as First Nations and tribal councils looking for partnerships on a variety of projects. There's corporate entities looking to sell parts of existing business operations and or looking for opportunities to partner with First Nations on elements of acquiring these businesses or create new businesses altogether. And then we have consultants out there working with First Nations, trying to understand our process. And then governments are again, working with us to try and understand our process. Again, our executive have been meeting a lot with MPs and regional politicians, and the success of FNFA is starting to build some momentum all over the country, politically and corporately. So, and not just with our First Nations communities. Next slide, please. So again, why are we experiencing these different requests? Again, it looks like FNFA has only just begun in the last 6.5 years, but really, FNFA has been an organization, part of Fiscal Management Act, and it's been 20 years or more in the making. But really, because of the amount of loans we've done, I mean, 1.3 billion in loans in the last 6.5 years is significant in First Nations country. I mean, my lending background, I mean, I've spent 30 years in the business and First Nations economic development arena, and working with regular commercial financing and working within the Aboriginal financial institutions for 15 years, and then doing dev with my First Nations for another 15. This tool is significant. It just levels the playing field for First Nations governments to a certain extent. It's not all the way there yet, but it's a good step to closing the gap in terms of getting our communities up to respectable living conditions. So again, 1.3 billion is significant. The cost of financing, the low interest rates, I mean, we're getting access to the types of low costs that most municipalities get across the country. And to leverage these projects request over 20, 30 years with no security, but just relying on strong revenues is significant. And I think the biggest strength of FNFA is we're owned and operated by First Nations for First Nations. The majority of our staff is First Nations. All our board are chiefs and councils of the members that are borrowing from us. And I think the attention we're getting is also the types of projects we funded. Again, not just social in nature, but we're starting to see them use their revenues to get and expand their revenue streams by acquiring and participating in different business ventures, large business ventures. Next slide, please. So why are some of these requests happening? Again, you know, we're starting to see some of this reconciliation recognized by governments and also by corporate Canada doing business in our traditional territories. Governments and investors recognizing that First Nations communities are underdeveloped opportunities. Our clients' successes are attracting all kinds of interest for FNFA, i.e. other First Nations, provincial, federal governments, corporate Canada, and international. And First Nations are also, you know, being savvy, and they're sharing the risk as opportunities impact shared traditional territories amongst themselves. And one project that has gotten a lot of attention for us is the Clearwater project out in the Maritimes, and that project has created a lot of attention to all groups previously mentioned, and I'll elaborate on the Clearwater project towards the end of my presentation. Next slide, please. So the one thing we want to clarify, again, our mandate is to finance governments, and ultimately what they want to do with those proceeds are entirely up to them. But we need, a lot of times, a lot of the First Nations, because again, FNFA is new, they think we're a traditional commercial lender, which we're not. The majority of requests, we're trying to start up businesses hoping to use unprojected, unproven revenues as a source for FNFA financing. We don't finance startups, so to speak, directly. But again, it depends on the kinds of revenue streams that the First Nations using to get into that business. A few requests, we're trying to expand businesses or acquire existing businesses, hoping to provide unproven revenues as a source for FNFA financing. Again, it's a little tricky, but we don't directly finance the business profits. Again, it's a significant opportunity for FNA to participate and assist First Nations acquire or develop significant businesses. Again, if we can't finance those businesses directly, we do look at those businesses, and if we can help the First Nation understand those businesses while working with them, but also just lend our expertise in any way we can support them in putting their best foot forward so that they can acquire whatever funding they need and get into that business. Next slide. So this slide is sort of just on the left-hand side is our usual FNFA assessment that we go through. And again, it's for the government type lending. And again, Donna touched on these earlier in her slide, are the First Nations scheduled with Canada? Does the First Nation have a financial performance certificate? Usually you have to get that through the FMB, the Fiscal Management Board. And then our First Nations FNFA borrowing member or non-borrowing member. And then ultimately, what is the financing request for? What type of financing are they looking for? And other financing that may be involved. Donna, if you want to click to the next slide, please. I just can elaborate on this and come back to that slide a little bit. So again, you saw this slide earlier with Donna. These are the types of revenues that are being leveraged from the First Nation in the various provinces across the country or with Canada. Most of these are long-term in nature. Usually we need to have long-term revenues, stable revenues so that we can finance. But as you can see, there's a lot of common revenue streams in just about every province, like added value tax rebates, fuel tax rebates, gaming really picked up some steam here in the last few years. And then there's some resource hydro projects in Quebec. So there's some variety here, but a lot of commonality. But so Donna, if you can flip back to that previous slide. So then we look at that stuff, but then my role really starts to kick in to the other three areas. And I'm not going to get into all these, but these are some of the things we look at when we're asked to consider some of these partnerships. And this is some of the stuff that we would expect the First Nations or consultants working with the First Nations to ask themselves and put in their business plans, just so that they're doing their own due diligence and they're putting their best foot forward, again, whether it be to us or whether it be to traditional financing for businesses. So again, what is the business model? The ownership structure, product, service, what type of product is it, the service is it, what type of industry? Is the industry regional, national, or international? Is the industry stable? And what are the benefits to First Nations involved? Obviously, usually any type of business development that I've seen in my career, but also just my short time here at FNFA, all the First Nations are driven to create these and acquire these businesses with the intent of maximizing revenues and profits and creating opportunities, jobs, careers for their members, but also a chance to use those for those profits and inject them back into the community for more social programming, which again there's a long ways to go, and that's been the motive I've seen throughout my career. Again, it's important that the First Nation and the consultants demonstrate they understand the revenue and the profitability of these plans. So, the basic thing that we stress is the plan realistic? Are the projections realistic? The cost, are they substantiated? Sometimes you might need appraisals for some of those things. What are the long-term revenues? If we're looking at possibly using some of those revenues, we'd have to see long-term secured revenue streams to at least give that consideration as to maybe we can help finance those revenue streams. And again, it refers to the long-term contracts in place for these revenue streams. Again, I think every entrepreneur and every business that you're jumping into, it's always about mitigating risk. So a lot of these questions that should be asked, what are possible interruptions to revenues, the capacity of existing or the new management that is going to be put in place, And again, appraisals for existing acquisitions, appraisals for asset acquisitions, expansion plans, proper insurances in place, and expense or expansion clauses that could be involved with the business acquisition. So this isn't everything that would involve. I think each opportunity represents different challenges for those opportunities, but this is what we believe is the core of what should be considered when looking at these commercial businesses. Next slide, please. Again, we looked at this one, so the next one after this. So again, why, so we've had our first really successful partnership come about with, I believe there was 7 First Nations in Nova Scotia that came together and became members so that they could acquire some significant businesses. So it's a Clearwater project, and why were they successful? All the First Nations involved became FNFA boring members and were able to spread risk amongst themselves, which was key. The First Nations leadership, staff, and their professionals had required skills to execute the transaction, which allowed them to seize a significant business opportunity. And that was key because this opportunity came together in a matter of months. And by them being organized and working collaboratively, and they were able to, like I said, come together. I know it's very difficult at times in any type of partnership, but for 7 First Nations to come together, there's significant skills involved in cooperation. Again, First Nations provided a clear, concise, professionally done proposal for all stakeholders involved to make informed decisions, and that was so key. I mean, I can never stress enough, being an ex-commercial lender or even working with the first banks. Sometimes you only get one time to make a first impression. It should, and hopefully it's your best impression. So the more informed and the more researched you are when you walk in, it makes it that much easier and sort of ticks off one of the most significant boxes that a financier would be looking at. Next slide, please. Again, Clearwater was significant in that it had some major corporations involved internationally. So they partnered with premium brands, so they're partnerships, and they acquired an international business called Clearwater while securing significant fishing license as assets. FNFA was able to utilize the established revenues from the fishing contracts or licenses with established company Clearwater. These revenues are allowed under FNFA's mandate. So therefore, we were able to use those revenues and from Clearwater and who leased the fishing licenses from the 7 First Nations. And these were long-term leases, which fit our mandate. And ultimately, that's how they were able to get into business with Clearwater and premium brands. Next slide, please. Again, we finance First Nations governments, but that's not to say that we aren't there with the First Nations assisting them and looking at all these different projects. So we will continue to listen to these inquiries in order to assist First Nations develop to their full potential. First Nations now have another level of financing available to them through the FNFA. Infrastructure development and economic developments are very much intertwined in quite a few of these initiatives. The success of FNFA's First Nations will continue to be invaluable in order to allow continued access to these capital markets. Their financial strength, the First Nations, must remain or improve for the continued success of FNFA. FNFA has a significant role to play in assisting First Nations assess or acquire opportunities in order to improve First Nations quality of life through Canada. We are proud to contribute to our client success across Canada. And one more slide, I think. And again, so on behalf of my colleague, I appreciate the opportunity to present to you, and thank you for your time, and everybody stay safe, stay patient. We've got a bit of ways to go here, but again, thank you.
Thanks, Don. I'm going to stop sharing the screen now and open the floor for any questions. We have almost 20 minutes. I'd love to hear if you have any questions or if there's anything else that you'd like to know.
Yes, and please just put your questions into the chat if you would like me to read them out to our presenters. And if you would like to present it directly to them, just raise your hand and I will call you out.
Maybe I can ask a question to the group. Are there any? Oh, here we go. Gail Joe has a question. Gail, did you want to ask your question through the mic or did you want to type it into chat?
Hi, Donna. Nice to see you. Thanks for the presentation. I'm just trying to get the screen back here. Can you just explain a little bit more about your credit enhancement backstop, how it works? You mentioned it briefly in your presentation.
Yes, and thank you. That's a really good question. So the Credit Enhancement Fund is one of two debt reserve funds that we have that serve as a backstop. So as I mentioned in the presentation, our loans are supported through own source revenues, and we have a revenue interception model where instead of those revenues going to the First Nation community and then to FNFA, they just go straight to a shared account between the FNFA and the community, and then from there the loan payment is made. If in the unlikely event that that own source revenue stream is interrupted, or if it is less than what's expected and a community with their loan, they go into default, we have two backstop programs. One is the Debt Reserve Fund, and then the other one is the Credit Enhancement Fund. And so the Credit Enhancement Fund is a fund that was that's funded by the federal government of Canada. So in the event that a community is unable to pay, we have those funds that we can access to make the interest payments. And then I believe we're required to repay those funds, or the First Nation community will repay those funds once they're able to, and the revenue stream is back up and running. Does that help?
Yes, it does. Thank you. Have you had to access that Credit Enhancement Fund yet?
Never.
Okay, so there's been basically no default at that capacity.
None. And, you know, when we review a loan, you know, I think that our finance team is really considerate about ensuring that there are other revenues in addition to the revenue stream that we've identified that can support a loan. So we take a lot of consideration into that as well. But for now, there's never been any default whatsoever.
Okay, great. May I ask just how much is that credit enhancement pool? How much is that fund that sits there and as a legacy, I guess it would be, right? Because the intent is that it's never used.
If you want, Donna, I can maybe add to that.
Yes, go ahead.
Maybe just, I think the fund is $42 million. It's funded by the federal government, shows their commitment to this organization and the First Nations. I think the other thing that maybe we haven't touched on is the FNFA is built off a model that's used for municipalities across the country. And so they've been in existence for over 50 years, and there hasn't been one default in that model for over 50 years. And so I think with the amount of due diligence and the steps we take here, you know, again, it's impressive to see, you know, there's no one's been in default here, and it's been 6.5 years, and I don't expect that going forward. Even during a pandemic, we've handled the situation quite well, actually. Credit to our First Nations.
Yes, that's great. Great to hear. Thank you very much for that.
Thanks, Gail. Any other questions out there?
Must be Monday morning.
That's right. Does anybody have, you know, I know we wanted to talk about, or a lot of you were here about infrastructure projects. Are there any infrastructure projects out there that you're wanting to talk about, or about how it might be financed through the FNFA?
Hi, good morning. It's Jenny Tucci from Ukulele First Nation.
Hi there.
Just speaking to the topic of community infrastructure, we're going through a couple of different projects that are going to require some pretty significant investment in infrastructure, some for land use development, for residential, mixed commercial. We're also going through a process of trying to identify community expansion, where we're experiencing a lot of housing shortages, and we need to expand beyond our current footprint. So I guess twofold: what type of financing is available for those types of projects in terms of dollar amounts, and what's the process to being scheduled to the FNFA? I don't know if you touched on that. I was kind of in and out for the first little bit there, but I'm just curious what the process is to be added.
Thanks for that question, Jenny. That was really good. So to determine the type of financing that's available to a community, our finance team will do a review of a community's most recent 5 years audited financial statements and schedules. And from there, we'll look to identify the existing revenue streams that can support the financing. And the existing revenue streams can be the own source revenues, or other revenues such as gaming or forestry or other business revenues. And so we work with the communities to help identify those. Now, the process to becoming scheduled, and that's something that I can assist with. What we do, or what the community does, is they submit a band council resolution signed by Chief and Council, and send a letter to the Minister of Cernak. And the band council resolution and the letter will request being scheduled to the First Nations Fiscal Management Act. So I have templates in place that I can assist you with filling out and completing, and then that's the process. It can take between 1 and 3 months, just to let you know. So there is a bit of a, that one can take time. Anything else that you want to add, Don?
Yeah, I see it. I guess is that question answered for the lady?
Yes, it is. Thank you.
Okay.
Thanks.
I see a question here from Alvin in regards to Alvin DeLorme for the Clearwater success story. Can you provide more detail on development of that acquisition? Were the 7 First Nations new signatories, or were they signatories in the system for some time before the acquisition? I believe a couple of the First Nations were longtime FNFA members. They were right with us from the beginning, going back 6.5 years. But there was 3 or 4 of them that weren't members yet. So once that opportunity was identified, I think the experienced First Nations were able to help them understand our process. And as a result of that, I think it helped expedite those new First Nations getting through the system quite quick. And although there are some extra steps to get to our financing, they can be expedited pretty quick. As Donna mentioned, we got standard documents, whether it's FMB, First Nations Fiscal Management Board, or ourselves. We do have standard documents that can help the First Nations, whether it become BCR wording, different types of documents, all the wording we have in those 2 organizations. And then really it's just plug and play and put those numbers together and those documents together. And like I said, it took, I can't be entirely sure. I wasn't directly involved with that deal. I came in just as it was happening, but I believe it took 3 to 4 months to get them to become FNFA members. And then I think the deal came to us in June. By the time we funded it in December, there was a significant amount of money to finance. And can get the First Nations all in place with the proper documents and processes so that they could acquire that opportunity.
Yeah, I love the story of the Clearwater project. To me, that is a really good example of stronger together. Any one or even two of those communities, it might have been difficult to pull together the financing to purchase Clearwater, but when 7 of them did it together and became the Micmac Coalition, they were able to do it. So it's a real win for those communities on the East Coast.
Hope that answered your question, Alvin.
And so it's around 10:05 right now, so please, we have about 10 minutes left. If you have any more questions, please feel free to put in the chat or just speak up.
Hi, it's Gail again. I just remember seeing something on either Donna's slideshow or Dawn's. Did you have new construction of houses on there? Is that something that you finance as well?
Hi, Gail. Yeah, that's correct. We have financed new construction of housing for a number of different communities, actually. I think one of the larger projects that we've done was Peter Ballantyne Cree Nation in Saskatchewan. So we helped them with a number of new builds, but we've done it for various communities in BC as well. And that's, you know, construction of market housing, but also construction of housing for community members.
Okay, so the financing is just to the First Nation directly, not to membership.
Correct.
Okay.
Yep.
Gotcha.
We have a mandate to provide low interest capital to First Nation governments only. So if there's a community member that wants to borrow money for building a house, they wouldn't be able to go through us. But if the community on a whole does, then yeah, certainly they could come to us. And this is something that's worth mentioning too. If an economic development corporation owned by a First Nations community wants to access our funding, we can't lend to the ECDEV corporation directly. We would have to lend to the First Nations government, and then between the two of them, they would have an agreement.
Okay, great. So this is there a minimum or maximum or a number of units, whether you define it as bed administered housing, elder housing, market-based rental housing? It is kind of open as far as criteria?
Yeah, because we're using own source revenues to secure the loans, we don't necessarily have any rules about how many housing units need to be built with that fund or with those amounts. But when we look at, you know, minimums and maximums, usually our loans are at least $1 million. And then the maximum, it would depend on the community and what their borrowing capacity is. And we would use their own source revenues to determine that.
Okay, so you're basically looking at the own source revenues versus how viable the rental project is. You're not getting mixed up in or concerned about what the First Nation is going to charge for rental rates to make it a viable project. You're just specifically looking at the collateral security that you hold.
I think for the most part on the housing, usually find with those types of programs that the rent itself just goes back into sort of maintaining those homes.
Mm-hmm.
So we haven't done, I don't think we've done any projects where we've used the rental rates for housing because it's usually to cover off, you know, the infrastructure supporting it going forward.
Great. Okay. Awesome. Thank you.
I see another question there from Alvin in regards to, are the loans may they be used for land acquisitions, primarily urban or agriculture? yeah, I mean, we've seen First Nations borrow their money through the governments and for different projects where they're looking to acquire businesses or land off reserve and or on reserve to, and especially when it comes to acquiring lands internally from local TEs or CPs. So yeah, it's used both on and off.
Mhm. And one of the things too about FNFA financing, if it's being used to purchase, say, fee simple land, and the community is intending on using that land or converting it back to reserve status, the financing from FNFA doesn't really prevent a community from doing that, because we're not registering a mortgage on the actual property itself. It doesn't limit a community's decision to go through the ATR process.
Hi, good morning, everyone. John Johnstone here. I'm super early to this, but I thought I would start clicking buttons now because I always end up in a panic. five minutes before an event like this, and that never goes well. So I just wanted to check in, and then I will make sure all this stuff works. And I think I'm in the right spot for the 10:45 start, and then I'll just go on mute and get rid of my video as long as people give me a thumbs up and tell me that's the right thing.
Sorry, John, what this is the 9 o'clock infrastructure.
My apologies then. It's the same Zoom link, so I just came in a bit early.
Okay, sorry about that. Yeah,
no problem.
This is just ending in about 5 minutes, and then we're gonna have a 15-minute break, and then you can join, and it will be starting about then. So in about 20 minutes.
I'm very sorry. Have a great time. Cheers.
Mm-hmm. Well, if there weren't any other questions, I just want to close by saying that if your community is interested in learning more, we would be happy to speak with you one-on-one. We can provide a presentation similar to the ones that we've done today to your community, to the leadership or senior staff, just to help educate and so that they understand the process. And yeah, we'd be happy to talk about any of your financing needs that you may have in the future. Feel free to give myself or even Donna a call.
No, for sure. I mean, FNFA has grown substantially staff-wise in the last year or two. We went from a staff of 6 now to 21 in a matter of a couple of years. So we have all kinds of skills across the country. Hopefully we touch just about every First Nation in the country and get to them and help them.
Awesome. Well, I will just use the last 12 minutes then to just say thank you guys so much. We really appreciate the presentation. We know that, you know, you guys are taking your time and using your expertise to really showcase what the FNFA can deliver and what benefits it brings to different economic development officers and Aboriginal communities in BC and across Canada. So thank you guys so much for taking the time to do that. It's just been absolutely crucial. I think we've all got a great deal of experience and learning from it. So we appreciate that, Donna St. Louis and Don Morin. It was really, really great. I wanted to mention as a housekeeping to everybody that it would be really, really, really helpful if everybody completes those evaluation forms. It'd be a great resource to make sure that Canada can continue to give these kind of symposiums and information as much as you guys can. It's a great learning experience, and you guys are able to get prizes as well. All right. So as it was mentioned in the presentation, it's so important that we participate and all kind of collaborate in that way. So kind of building that knowledge base and that network and connection between everybody is super important. So please fill out that evaluation form if you can. I will leave it at that. And if Donna St. Louis or Don Morin wants to leave any last break for last minute. Otherwise, you guys are welcome to have your 15-minute break before starting another session or going on with your day. Thank you.
Thanks for your time, everyone. Enjoy your conference.
Thanks, everyone.